From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming June 7th non-farm payroll Friday trading session in the Euro US dollar. You can see that the day before, on Thursday, we had a significant move higher in the Euro US dollar. And there's a lot of things that can be said about this, and there's a lot of things that can be garnered from the fact that we broke above the 132 level. Quite frankly, this was the top of basically the top of the trading range that I thought we were in. We certainly have been in there for the last couple of months, so of course it makes sense that it matters. Here you have the middle area, basically fair value at 130, and we've broken higher. Now, this is predicated upon, this really started with the PMI numbers a few sessions back that were weak and suggested that perhaps the United States economy isn't expanding quite the way people had thought, and therefore the Federal Reserve would have to continue with its quantitative easing, thereby driving down the value of the dollar because of interest rate differentials. That's all good and well, and it makes sense, but to me, this is the type of candle that could be dangerous in the sense that non-farm payroll comes out later today, and if that number, let's say, is very strong, although I don't expect it, but let's just say that it comes out at 200,000, you'll see this move reverse immediately. And in fact, it will probably be in the blink of an eye. They'll take this candle out to the woodshed and end up right back at the 130 area. The reasoning being, of course, if the job market is getting better in the United States, and it's not just based upon people driving or dropping out of the employment pool, then the odds of the Fed tapering off quantitative easing earlier are back on the table. We essentially got a move of somewhere in here. Can't remember exactly the date. Wrong tool here. Somewhere in this general vicinity. The talk of possible tapering by the Federal Reserve was uttered by Bernanke at Congress. You can see what happened. Now we're starting to think that maybe they won't be able to do it, and you can see what happened. This is a pure interest rate differential deal. Plus, it should also be stated that Draghi, during the session, had a news conference where there was no expanded quantitative easing offered. There was no, really, it was very upbeat. Thought that the Europeans would be out of recession by the end of the year. So, of course, that added a little bit of life to the euro as well. But again, though, what's really going to matter is going to be the announcement. So I'm not willing to take a position on ahead of time, but I do recognize the fact that this number is a pivotal moment for the year, I think. I think this is probably going to be, if you had to take three data points from the year and make trading decisions based upon it, this is probably one of them. If we can break the highs, I think that's a very bullish sign we go much higher. However, again, I think if we drop back between 132, this pair is going to be in trouble. We'll probably head to 130 first, and then maybe even back down to 128. I stated, I think it was yesterday, or maybe the day before, that I thought 128 was going to hold for quite some time, and as a result, it does look like that's going to be true. You can make an argument for a W pattern forming. Um, Basically at the top of this candle. So again, a break of the highs from the session is a very bullish sign. We'll probably head into a pretty parabolic market at this point in time. But quite frankly, there are other pairs that this will affect as well. Dollar yen got absolutely crushed during the session, and if you see a good jobs number, that market will absolutely explode to the upside, and that's probably where most of the move is going to be. Another one would be dollar CAD. That's always an interesting to watch for these announcements. So, non-farm payroll Friday, always an interesting day.